This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. We've been watching some flow in Apple for a while. Today, there's more flow in the same direction. So let's take a look at Apple and see what might come next. We see here the 50 change to 100. We're going to look at, again, no spreads greater than 2 weeks. And we're going to click on this to sort by ask or above ask. We see here a couple of trades, $4 the IQ. I don't look at SU, 34 calls. This is interesting. Someone bought the December 34 calls in SU. Apple is something that I'm always looking at. March 150 puts. This is interesting. The reason it's interesting is because we've been following a big put buyer in Apple. So if I can click 5% is too much for Apple. Top 1% of positions in puts. You can see here, this one right here, this December 135 put. We've been watching this for a while. They've been coming in. They started on May 11th. And you could see all this flow here all the way up. You could see the open interest going up. They started buying these. You can go down here to May 11th. Let's push this up a little bit. May 11th, 23,000, right around 270. 4,000 here, 250, 5,165, 12,146. 11,121, 10,105. Then they got bigger, 28,000 at 64 cents and 32,000 at 58 cents. It's about, that gets you about there. So this is 60,000, half of the total volume, which traded at 62 cents. They started with about 30,000 up in the 240 range and then 120 for the balance. So the average is about, let's call it 120, 135 range. The stock today is up a little bit. The print we're looking at, the 7,500, March 15th, 150 puts, paying 340, volume 10,000. If you go up here, you see how everything is August 18th, the weeklies. Kind of want to get rid of that noise. It's too difficult to figure out what anybody's doing. There's so much day trading and whatnot. So I tend to look for the blockier ones a little bit further out to get a feeling of where the big institutional money is trying to put their pieces down on the chessboard. Apple here is the 150 puts, the 10,000. So that's right at the top of the list once I do it by expiration, but you could see here going all the way down, it would be the August 25 next weeks are busy, but again, weeklies tough to analyze. Okay, so we're looking at these 7,500 above the ass. Vol was up a little bit. Yeah, these are a buy. They came in at 1030. The part that I wanted to connect was these puts here, and now they're coming in for the March 150s here. We see puts here. So we see where the board is set up. Below 170, it's a little bit lighter. You see it's a little bit lighter. Your biggest puts are at the 170 line, 180. Stock is held, the 170, called the 175, 178 range here. So here's the chart. We'll look at the weekly, and we see May 11th, right, was where he bought these. So May 11th. So he started buying these right around here. Okay, that's where he bought the first tranche. And he started buying them all the way up. Okay. And you can see here, if we go back in time, it wasn't that he just picked a spot out of thin air. The stock had shown some resistance here over the course of time, playing the resistance game here. And he's saying, okay, Apple has, he's coming in right here. Okay, so Apple has shown to have trouble at the 170, 180 range. I'm going to start buying these 135 Decembers, the 135 Decembers. And he's buying these things thinking the stock could head back towards, in my opinion, towards 100. Okay, so when you think about this, you say, well, is Apple really going to go down 70 points? 70 points is a decent move. It's about 40% from here. So, I think that what we were seeing as it went up was a situation where money was just pouring into the top 7 to 10 names. And essentially, if something would happen to hit those top 7 to 10 names, whatever it might be, a China Taiwan incident, some unforeseen event, then there's no exit, right? There's no easy exit because everybody's going to want to turn around and sell these top 7 to 10 names, and you could just get a big downfall. So the interesting part here is that Apple looked great at 195. The story was arguably never better at 195. And that's usually when you see the big institutions start letting go of stock because the story's out. Apple's great. It has been great for a decade. It's about to get greater. They got all these different things coming up. And once that's built into the stock, the big money is saying, okay, we've had a huge run from 125 to 195, which is massive in the top name in the world, one of the top names in the world. You're talking about a 70-point run, which is a little bit under 60% run in 4 months, 5 months. Then, they're going to take some off. They're going to take some off and they're going to allocate that money into stocks that nobody's even looking at, right? And you start seeing a pickup in oil names. So whatever, Apple becomes the cash ATM for some of these other stocks. If they break 170 here, then you got the 160 line. And if it breaks 160, then you're going to get closer to this level 135. They are coming in for the 150s now. And I think if it breaks 170, we can get 160, 150. That would be a 10 to 20% move lower here. So if you get below the 165 level, 160 level, you start testing the 50-day, there's a path that you can get down to 140. It was just there in March. Okay, so you can't kid yourself that it can't get there. The question is, will it get there? I don't know. This person who's buying 120,000 of these things, he might be buying these as a hedge for a larger portfolio, a very large portfolio. It might even be a bank that thinks Apple puts are a better hedge than S&P puts because the SPY can't go down unless Apple goes down a lot, right? That might be the thought, and there might be some data that says that, and so they found this better, cheaper bet where they can get outsized returns than the S&P, and that might be the reason why they bought these. So it might just be an overall portfolio hedge, or it can be someone like Universa who is betting on these teenies, where if something does happen, these things can explode from $1.20, they can become $10, $20 options. Again, it's an outside chance that it does that. I'm not calling for Apple to get down to 135. I'm simply showing you how some of these bigger institutions use, instead of S&P puts, they might buy Apple puts because of exactly the logic I just gave you, that the market can't go down unless the top 7 to 10 stocks go down. Let's look at Apple, and nobody thinks Apple can get 135, which is probably why we want to be long those 135 puts, because nobody thinks it can get there, and of course it can. So there you have it. The March 150 puts, they're paying 340. They're looking at 140, 135 on those. For the 135s, they're looking at 120, 115, even 105, 100. That's the trade. That's what we're looking at. I thought it was interesting just to see how the positioning is being done longer term in Apple, just in case this thing actually has a hiccup. All right, that's Apple. I hope that helped to show you how the institutions play it. Make sure you smash the like button, ask questions. I'll talk to you tomorrow.